Welcome to another weekly market update after the market close on 15th of February 2019. So here's where we look at the big picture and the short-term picture. The S&P 500 is kind of like our benchmark to look at. That really affects all markets. And here it is over the last few years. Each up and down peg is a week of action and smoothed out for us by these moving averages here. The blue line, the 40-week, the red line, the 70-week. And I called the bull market here, or the system called the brand new bull market there, and told me to get out here and go to cash on the 22nd of October. It still got me sitting in cash, despite this very powerful bounce here from what was quite an oversold condition down here. But for a couple of weeks now, I've been thinking, where's the energy, keep coming from to push this thing higher? And I'm in cash, so I'm not going to fight anything. I'm not doing anything. But in terms of just commentating, I'm just, I'm not going to fight this really, because the market just wants to go up, and when it wants to go up, that's all there is to it. And I don't see any sign of it breaking its upward trend yet. So what I'm looking for now is, is it going to be, is it going to go down and get worse, or is it going to turn into kind of like we did in 2016, which is more of a reset? And even though it's well back above its 40-week averages here, and I'm sure there'll be a lot of people jumping back on board now, my system is saying I'm still in cash until this blue line here, the 40-week, is going to turn into more of a 6-month uptrend. And that's to avoid all the false positives and all the whiplash that the market can give you when it's kind of an uncertain period like now. But so that is the big picture, the longer term view. The market's still got to prove itself to me before I say a new bull. Here is the short term picture of that over the last 6 months, and we can see there's that big rise, and I don't see any in the short-term trend. I still see it going up until proven otherwise. Friday was a very strong close. The market is overbought, but it's been overbought for weeks now, and it doesn't seem to care. Very stretched, but I'm not going to get in the way of that. I think an important point for the market to get to will be if you can get a close above about 2013 here from this old resistance level, then it really will be off to the races and pushing maybe towards a brand new high again come June. But like I said, it's still got itself to prove. So I'm not in any short positions right now, not in any other positions. Commodities, I'm waiting for, because of the government shutdown, things to sort of reset, and the data stream I need to be updated on that. So I'm just sort of sitting in my hands now. But remember, one of the most important things is not to lose money. It's not just about making money, it's about not losing money. And there is nothing wrong with sitting in cash. Cash is a position. It certainly was in 2008 and will be going forward. The market has just made some great gains over the last 2 years, and there's nothing wrong with waiting and seeing. So I say, don't lose money. That's rule number one. So I will speak to you next time.